Hi, Matt McAleer, Director of Equity Strategies, Cumberland Advisors, November 15th, just after the close. I'm here with a special update today. It's Tuesday afternoon. Make sure you do join us for our Friday Week in Review. Wanted to cover a couple of topics that are pertinent today. I've been surprised over the last week or so, the calls and emails I've gotten on the FTX fiasco. I knew I had to do a video when I got an email from my mother over the weekend asking me, did you own that stock? So obviously there's a whole lot of confusion out there. FTX is a modern day bucket shop. Bucket shops through the 80s and 90s were infamous throughout Manhattan, throughout the country. They were companies that made their own markets in securities and were really selling a fraudulent story. The key being made their own markets and were unregulated, or fairly unregulated. And that's what you had with FTX. You had a company that on the surface is a trading platform in the cryptocurrency space, coins and so forth. Crypto coins, Bitcoin, Ethereum, all the names that you hear week to week, month to month. When you're making a market, you're setting the bid and offer on the exchange. It's really highway robbery. Where clients of that firm, whether they're institutional or individual, ran into trouble, is that's an unregulated exchange or platform. So they also had their own trading division, Alameda. And they commingled customer, cash, moved it right onto their trading books, right onto their own trading platform. That money is obviously gone in terms of having any kind of transparency to where it is. Now, clients of FTX, they will file different suits to try to recover. But the key is, in any of these scenarios with fraud, it's often linked to a term we like to use called zealotry, a zealot, zealots. You have to be careful, even today, about being sold promises and hype, and it's very difficult. This dates all the way back to the 90s when AOL first had message boards, and the same type of scenario was going on. Before that, it was one-on-one with a phone. A bucket shop, a broker would call up, tell you the story, try to sell you on a story, but it was one-on-one. When message boards came around, the megaphone got louder. Today, with social media, this kind of fraud can be perpetrated to a wide audience very quickly. So beware of zealots. Zealot is a term that's often linked or used in context with religion. If you remember one thing, having a religious conviction about any investment or strategy is poison. It'll get you carried out in a box 9 out of 10 times. Second point, today, busy day trading at Cumberland on the equity side. This morning we nibbled on some semiconductors in the US ETF portfolio. Then we got that, about 2 o'clock, that headline of some Russian rockets landing or hitting in Poland, and perhaps a couple of casualties. We did some light selling there in US ETF. We sold our small cap. That was a 7% position. In US core, we sold 5% of our SPY, our S&P 500, took the cash up to 16% there. And in tactical, we just trimmed JP Morgan a little bit. Took that from 7 down to 5%. Why do we do that? When we don't know outcomes in a scenario, but both outcomes can be difficult, we like to lighten up. Why can both outcomes be difficult here? Rockets landed in a NATO country. We believe that's what the headline is. There has been some confirmation and denial, of course, from Russia. Rockets landing in a NATO country leaves the NATO country and NATO with a difficult scenario. If they do respond, we've got problems. If they don't respond, we've got problems. We don't like a double-edged problem without having a positive edge. So we just lightened up a little bit there. In terms of our US ETF portfolio, we're sitting now with the bank sale yesterday and the IJR sale today, sandwiched with a little nibble on the semiconductors. We're at 26, 27% cash. US core at 16% cash, and tactical trend 19, 20% cash. We'll see what these next couple days bring in terms of geopolitical stress, but that's money that is earmarked for getting long again in the market. Why do I say that? The last couple of weeks have created a higher low versus some of the damage we saw in September and October. We like to trade against higher lows. Higher lows are positive in the market. It's a mark of supply drying up. And that's all markets are, supply and demand. So we'll see how this scenario between Russia, Poland, and Ukraine and NATO works out. We'll keep our eye out for any reasonable entries. Thanks for the time. Join us on Friday.